Look, I think one of your colleagues said it perfectly when she said that this is going to throw a spotlight back on the virus. I mean, we've been kind of viewing this market as the pattern of attention among market participants is kind of really hovering around two narratives. One is deeply focused on COVID, the ramifications for the economy, kind of this slow disaster that just keeps going. And then the other narrative is one that we're kind of getting past it and we're getting, into a robust recovery or more robust recovery. And that maybe the world will start looking more normal in 2021. And so those kind of narratives have been playing out over the last 3 months. And you can see it in how, on some days you'll see more growth-oriented companies that are deemed to be, going to do well in any kind of world, whatever happens to COVID, versus companies that need a recovery to do well. And I think that this event is going to put more focus on COVID is really the driver of things at the moment. And then with regards to, there's already been a lot of uncertainty around the election and just political uncertainty in general in this country. And I think this only heightens it. So I think you mentioned, I don't have my monitor in front of me, but futures have taken a hit. We'll see what happens in the morning in the U.S. But this is big news. And I think a lot of people are going to try to make heads of how to interpret what this means for the political situation for President Trump. Look, he is an older gentleman, so there's risk there, and I think we're going to have to digest it all and hope for the best, and hope he has a mild case of it.
Yeah, I'm just looking at my futures on my screen as well, Jeff. There, and we're talking about at the moment. I saw the flash headline on CNBC.com was the fact that they've seen futures fall around about 400 points on the Dow, but now I'm seeing a day change of down 0.8% for the Dow futures, a similar decline for the S&P. This adds another element of uncertainty for investors as well. And Jeff, I know it's unsavory to talk about financial markets and oscillations on this when, of course, the president has got COVID-19 with a positive test as well. But do you expect this to negate any interest or the real interest in issues such as the payroll, which was the main event today?
Yeah, I mean, I think it will. I mean, I think the payroll report is important because it's an indicator of how robust the recovery is or isn't, I guess. And the other way that we were looking at the payroll report was how the market responds, because how the market responds to just take the payroll report, for instance, kind of gives you an idea of where the patterns of attention are focusing. How the market, this is a game changer, I think, in the short run anyway. I mean, I really think we have been bouncing around in terms of markets looking at this COVID's going to be here for a long time. It's the new normal versus the recovery narrative. And I think this is going to put focus really back on the COVID view of markets. So just off the top of my head, I think that you'll see more, probably more of the, the tech sector will probably continue to hold up pretty well. And I would think that some of the more cyclical names that require a recovery are probably going to not benefit, because when the world really focuses on all the effects that COVID have, when it really brings into stark reality that we're potentially going into a winter where we're going to have a second wave. I mean, President Trump getting this really highlights that in a way that I think it'll focus attention back on the virus and the effects it'll have. So I would think that it's that narrative is going to be really driving market behavior going forward for the near future.
It highlights